Mayuresh Joshi, fund manager at Angel Broking, Manav Chopra from Monarch Net Worth Capital join in to talk about the way forward for the markets. And Mayuresh, what a week it has been, right? It seems clearly that we are immune from the Brexit impact. The fact that the markets have managed to claw up all the way to a fresh 2016 high. And of course, the government as well doing its bit really in terms of a lot of policy moves. The 7th Pay Commission panel recommendations as well being accepted by the cabinet. And now it seems more than ever that GST is going to get cleared through in this upcoming monsoon session in the parliament.
Evening, Aisha. Oh yes, the markets have clearly vindicated the fact that whatever the government is doing at the centre in terms of policy making, whether that be FDI clearances and so on and so forth, have been duly rewarded. Secondly, I think the entire theme that the market is playing on in terms of good monsoons expected to come through over the next couple of months. Add to that the expectations of GST getting cleared in the monsoon session of Parliament. I think that is abetting all the positive sentiments that we are seeing on the domestic front. More or less on the international scene, I think we've brushed away fears of Brexit, though the uncertainty probably remains over the next few weeks and quarters in terms of how the handover process might be. But clearly the markets have probably given or vindicated the fact that the Fed is not going to hike its rates in the July policy. And again, with expectations of corporate earnings and the capex cycle on the private side reviving or expected to revive in the second half, is keeping the sentiments quite buoyant. So from a short-term perspective, I think the positive sentiments and the positive swing in the markets might continue. The re-rating might only happen once corporate earnings revive, and that probably might happen in the second half of this fiscal as well.
Yeah, indeed. In fact, just talk about the 5 factors which seem to be driving the rally. And India clearly seems immune from the Brexit impact. The monsoon advance, more importantly, has been seen as a big positive. And like we just talked about, GST passage hopes are running high in the monsoon session of the Parliament. And earnings momentum is seen continuing in the first quarter, though it has to be said that the DII buying start of the week cushioned the FII selling. So clearly it's the domestic participants which have shown conviction yet again in the market. And Manav, just want to come to you on the technicals. Now that it's a comfortable notch up above the 8300 mark, the expiry went by very, very smoothly. What is it that you're sensing on the charts? What could be a prudent Nifty strategy?
See, absolutely, the strategy for the near term would be a buy on dips approach. We have already seen a very good rally from the recent lows of sub 8,000 levels, and a very swift rally of 300 points, 350 points will definitely call for a short-term pause, but I don't expect any a sharp decline or a corrective rally again in the markets. You may see a short-term time correction, but as long as Nifty trades above 8200 and 8250, I think it still has that steam to even rally and test the levels of 8500. So the strategy should be don't get too aggressive at the current levels. In case if you get a short-term dip towards 8250, definitely get in and buy and maintain your long targets of 8500.
Well, this entire week actually saw some big moves coming in from the government stable as well. And of course, the 7th pay panel recommendations got cleared through by the cabinet. And this really brought about a fair amount of cheer in some of the beneficiary stocks or sectors. The pay panel push and this week saw big moves coming in for a Symphony, Bajaj Electricals, Havells, VIP and Asian Paints and Crompton, Britannia, Nestle, Dabur, Marico, Bajaj Finance and Capital First. Mayuresh, not to say that these stocks and sectors weren't already excited in anticipation of the 7th Pay Commission panel actually clearing the recommendations, but what is your sense on how one should approach these stocks now? Because some of them, like a Bajaj Finance for instance, and some of the FMCG names are still very richly valued. Is it time to book out, take chips off the table, profit take, or would you say continue to buy the dips?
Again, I think one really has to be stock specific, Aisha, in these markets, and all these sectors that you're mentioning is expected to do well. I think the 7th Pay Commission acts as a catalyst for spurring the spending demand to come through, and once that happens, I think that gets duly rewarded in terms of volumes going up. So for consumer durables, for consumer staples, for a lot of FMCG companies, you will actually see volumes picking up. And what we had actually seen over the past couple of years, because of deficient monsoons, the volumes had actually dipped. So any pickup in demand on that front is clearly going to offset any pressure that you're probably seeing on the cost front. So the cost inflation might get offsetted by increase in realizations and volumes. Paints, again, a clear beneficiary because repainting demand is expected to come back in a big way. Two-wheelers, any of the appliances stock, air coolers, you're probably looking at electrical appliances. I think a whole gamut of these sectors are expected to benefit. But again, I think one really needs to cherry pick, because I think a few stocks, as you've been rightly mentioning, from the NBFC stable, which is also expected to benefit as retail advances grow at a very fast clip over the next few quarters, need to be valued in terms of how their earnings perspective will pan out over the next few quarters. So NBFCs as a space is something that we like, but within the space I think we really need to be stock specific and keep valuations in perspective.
Okay, indeed. Let's also talk about the new highs for the year on the benchmarks with sustained buying. Darshan as well as Vivek join in from our research desk. Darshan, to you first. Tell us which stocks have outperformed when it comes to large caps.
See, in the last 4 or 5 days, there is clear strength as far as the Nifty is concerned, because in the last 5 session itself, the Nifty has moved up almost 5%, erasing all the Brexit losses. Some of the important, factors that you have to see, or the lead indicators that you have to see, that is the fact that we are at a fresh 2016 high. As far as the Sensex is concerned, we are trading above the 27,000 mark. The Nifty is comfortably above the 8,300 mark, and the Bank Nifty is just less than 100 points away from a 2016 high. So clearly there seems to be a lot of traction as far as the large caps are concerned and the mid caps are concerned. Some of the counters which have gained in excess of 50%, Yes Bank for one has gained over 50% in this financial year itself. Hindalco is up almost 44%. The other counters which have moved up anywhere between 20 to 25% include counters like Ambuja, Tata Steel, Bosch, Grasim, Ultratech and BPCL. But a lot of these large caps are trading at fresh 52-week highs. Counters like Yes Bank, Grasim are trading at fresh 52-week high. IOC was one of the star performers on trade on Friday. So this counter is up almost 7%. HPCL, Ultratech and Bajaj Auto. So the big rally that came out as far as the Nifty is concerned, certainly being held by some of these large cap companies.
Okay, indeed. And the month of June clearly saw the broader markets comfortably outpacing the benchmark indices. Vivek is here with more details on which of the mid caps actually saw a big move and a rally come by.
Well, the story of June, the month that just passed us by, has actually been the story of the broader markets. If you're looking at the mid-cap and the small-cap indices, both of them actually went ahead and comfortably outperformed the benchmark indices. If you're talking about the small-cap index, it went up almost 11% in the month of June. And if you're looking at the number of sessions, we had 22 sessions in June. The small-cap index actually went ahead and made gains in 18 out of those 22 sessions, seeing a small downtick only in the 4 sessions where, global volatility was abound. Now, if you're looking at, the mid-cap gainers and especially YTD, which are the stocks that are actually driving the rally in the mid-cap stocks in 2016, it's been Bharat Financial up almost 48%, Ramco Cements, stock is up almost 47%, from January. Also stocks like Biocon, stock has consistently been hitting 2016 highs. And if you're, fresh lifetime highs as well. And if you're looking at a stock like Piramal up 44%. Now coming to the small cap, index and, which are stocks that are actually driving the rally in 2016 for this particular index, Manappuram Finance is a stock that is up almost 144% in 2016. Also a stock like, GNFC up almost 107%. And of course, we're talking about the sugar sector revival, and Balrampur Chini isn't, left behind, up almost 81% in 2016.
Oh yeah, indeed. What a move it has been from within the small cap universe as well. And Mayuresh, interesting pockets there, right? You've seen the resurgence of real estate this entire week. You've had, in any case, commodities like soft commodities, that is, like sugar as well as tea, in any case, look very strong. And then, of course, there have been sporadic moves in some of the penny names as well from within the small caps, which have held out. What is looking interesting to you within these pockets?
From a cyclicality perspective, I think mid-cap cement is something that I'll be keeping a very keen watch for. The large caps have probably got a little bit richly valued at this point of time. But if the entire hypothesis is based on the fact that infrastructure and real estate spending is going to grow leaps and bounds, and the volume growth is going to be very, very evident in all these counters, the utilization levels along with expected realizations going up over the next few quarters would see a tremendous amount of earnings boost for cement companies. So mid-cap cement as a pocket is something that I'll be very, very watchful about. Real estate as a space is something that I'll keep an eye for as well. So in my opinion, again, I think we've probably seen the worst happening over the past so many years. Companies which have a rich balance sheet, not too much leverage, where the pre-sales are expected to build up gradually over the next few quarters is something that I'm probably liking. So something like a Soba, for instance, I think, though the pre-sales guidance has been given at around 2,000 odd crores with 3.5 million square feet expected to be sold in FY17, my own take is that FY18 will be far better for a company like Soba, with operational efficiencies kicking in, with not too much leverage on the balance sheet. And again, I think the projects that they've probably undertaken at this point of time has seen tremendous response. So the operating efficiencies might take a couple of quarters to pick up, but again, I think if they pick up meaningfully and if the stock corrects from the current level, I think if one invests systematically over the next few months, I think Soba can deliver brilliant returns over the next 2.5 years.
Indeed. To you then, Manav, and what to your mind is looking interesting from within the cement pack or the real estate pack? Anything that's tradable come Monday?
From the cement pack, I think Ambuja Cement is a stock that we can definitely look in for buying for a medium-term perspective. Even though the stock has seen a good rally and the immediate support is at 245, so I think we can wait for a short-term dip into the stock because it has already seen a very good move in recent few weeks. So 240 should be the support where I'll recommend a buy, but I think the medium-term upside target for this would still remain at 270 and 280. From real estate, IBR is a stock which definitely looks very well poised for a good run up. The stock has seen a good breakout on the weekly charts, and most importantly, the momentum on the daily chart is also seeing some new legs on the upside, and the oscillators are indicating some more steam. So I think IBR has a very good steam, and the stock has a potential to even exceed its recent swing high of 104. So the upside potential for IBR would be at 110. So it has a very good risk reward ratio at the current levels.
Manas, just very quickly, Maruti reacted negatively to its monthly sales data. Do you see further pressure in the stock price?
I don't, because the stock is in a very good uptrend, and I think it has a very strong support at 4100 level. So even though there is a short-term pause or a short dip into the stock, actually it should be bought into, because the potential upside target for Maruti would be at 4250.
Right. Well, what Friday also saw was a stellar debut from Mahanagar Gas. The stock opened at a 30% premium to its issue price, a strong opening against the issue price of 421. The IPO as well, remember, was oversubscribed by a whopping 64.5 times. So good going for this one, and the management seems pretty confident on how they're going to do the business going forward as well. Extremely well cushioned in terms of the funding as well. So yes, big plans there, but Mayuresh, the question is, for someone who's already made the listing gains, what should they do now with Mahanagar Gas?
No, as a disclaimer, I think they should contact their financial advisor. But what I can say is on the financial performance, it's been quite exceptional. The earnings trajectory has been quite good. The underpenetrated segments of both CNG and PNG actually will start increasing over a period of time. Secondly, I think cash-rich balance sheet, dividend yield in excess of 4%. It's throwing out cash in excess of 200 odd crores on an annualized basis. So I think no complaints in terms of how the operational efficiencies of the company are panning out at this point of time. And my own take is, over a period of time, as the penetration levels start increasing, you'll probably witness volume growth coming back to that 7-8% mark, to say the least. The cost of gas is extremely competitive for Mahanagar Gas. It lies anywhere between 3.06 MMBTU to $5 per MMBTU. So that cost efficiency is also built into the model. So yes, I think from an operating performance, I think time will tell, but my own sense is that the operating performance of the company should be quite exceptional over the next few quarters.
Okay, let's also bring on board Yatin from our research desk to try and get a sense of what the dealing room chatter is. And Yatin, what stocks could be active come next week?
Well, the dealing room pulse is indicating that there is a big upside coming in for tire and tea stocks. Probably the kind of consolidation we have seen in both tire stocks and tea stocks from here on the back of domestic fund action. Dealers expecting that tire stocks can do well on the back of domestic funds buying shares of Seat and Apollo. And also if you look at MRF and Apollo Tire, JK Tire, all of these tire stocks were gaining in trade. Also, tea stocks surged, late in the second half on Friday's trading session. And if you look at McLeod Russell and Jeshri in particular, we saw some good HNI activity in the stock. And in general, also dealers are expecting a 10 to 15% short-term upside in tea stocks. So watch out for that pack as well. And in the private banking space, Lakshmi Vilas Bank and Karnataka Bank is something wherein HNIs have been accumulating shares at lower levels. Probably, they are expecting that the quarterly earnings would surprise on the positive side, and hence, ahead of that result season going forward, they are accumulating private banking shares.
Right, Yatin, we're going to leave it at that. Manas, to you then, some stock strategies for Monday morning?
Yes, I have two strategies. My first call is a buy on Mahindra and Mahindras. We have seen a very good breakout on the charts today, and basically that has converted into a weekly and a monthly buy signal. The stock has also observed a good rally from its recent lows of 1320 from last Friday. So the steam and the move, it clearly suggests for a good rally going forward. So on the lower side, 1420 would be the stop loss for an upside target of 1550. And my second call will be a buy on LIC Housing Finance. Actually, the stock has been trading since past 1 year in a sideways long-term trading band, and we are expecting this breakout to happen in the near term, as most of the oscillators have turned positive on the high time frame charts. On the lower side, 480 would be a strong support, maintain a biodims approach for a stop loss of 475, and we expect a medium-term upside target of 560.
Mayuresh, to you then, Bajaj Electricals is a stock that you at Angel are pretty bullish on.
Oh yes, and again going by the theme of the consumption demand picking up, discretionary spending going up, my own sense is a consumer durable stock like Bajaj Electrical is poised to do well. It's got a huge distribution network, 4,000 odd distributors, you've got 4 lakh retail outlets. The segment that was not doing well for Bajaj Electrical, the E&P segment, has shown a huge turnaround. So my own sense is that the profitability should start picking up over the next few quarters. The EBIT margins have actually shored up to that 6% mark. The order book is picking up quite decently. And on a consolidated basis, if you take the E&P and well, there's the consumer durable segment, the top line growth should grow anywhere between 15 to 16 odd percent. The bottom line growth should grow at a pace of 29 odd percent over the next couple of years. The valuations are not expensive at this point of time, and what this will do to the return ratios is quite humongous. So the ROE should actually expand from close to 14.2% to 16% over the next couple of years. So yes, I remain extremely optimistic on Bajaj Electrical over the next 15 to 18 months.
Okay, Manav as well as Mayuresh, good chatting with both of you as always. Been a stellar week. Let's only hope the gains only build on come next week as well. We'll catch you then with all the market action on the market on Monday morning. with your trades right here in 80 now. It's turned out to be a very somber week, at least for the Nifty, and that was pretty much the case with the broader markets. There were those lively pockets. The entire Bajaj Group, HFCL as well, propped up from nowhere. You had a Bombay dying as well, holding out very well. A Future Consumer was a big story that also played out in the week gone by. And let's talk about some of these big buzzers in trade. You know, we were just chatting with our colleagues Tanya as well as Mubina, who were highlighting all these big buzzers. And Deepan wanted to, get your views in on a stock like Bombay dying. It's rallied 30% this entire week. What do you think is the story here?
See, I think basically there's not much in the manufacturing or the retail operations, for that matter, or trading operations. It's more of a land bank story, and these things are very difficult to call. Certainly there is scope for value unlocking over there, but then look at the track record of Bombay dying and what it has achieved over the last several decades or so. So while you may have a trading bounce on expectation of positive news flow or some value unlocking opportunity, and it will certainly rally, but then it's not really for long-term investors. There's no real growth happening in the underlying operations of the company, and analysts or traders who may have an advantage over here, in the sense that they may have understanding of the business better than the common man on the street. So I would say just avoid the stock at this point of time, from at least an investment perspective, but certainly I think traders could dabble in it, because price volume action certainly suggests that the stock can rally higher from these levels.
Doesn't seem to be the case with giants like L&T, because we've seen a nice big boom in the entire infrastructure sector, and clearly L&T is the leader of the pack.
Yes, Aisha, and given the fact that L&T has such a high correlation with the index movement, I think is something very noteworthy, because Friday's price action coming out of nowhere for L&T, frankly, because I think no one anticipated that the stock would surge 3.5-4% on Friday, and given the fact that the stock has had a history of consolidating in a narrow band since last so many weeks, especially at a time when the index needs a lot of heavyweights to perform. L&T performing on Friday, I think, was a very good sign, and if it manages to even continue the show which it did on Friday, I think there is a higher chance that you might see a lot of the other large caps also supporting the move on the upside breakout for Nifty.
Okay, that's that on L&T, but let's take it across to Karanya Rao, my research analyst, who's waiting by to tell us what's the dealing room chatter as we step into trade next week. Karanya?
Well, following an extremely range-bound sluggish week, I think what the street is expecting is that even next week the trade is likely to be flat to sluggish kind of a move that we're likely to see. On a fundamental side, because the Q1 earnings have been fairly disappointing, what the street is expecting is that that effect will also spill over in the second quarter as well. Therefore, the growth on most of the stocks and overall market sentiment is likely to remain slightly range-bound and slightly subdued going ahead as well. Expect the metal stocks to continue an up move, like we've seen fairly good rally in lead as well as nickel prices, even the recent run-up in aluminium. What happens on back of all of that base metal price hike that we've seen, metals is something that is likely to continue the uptrend. As far as the pharma is concerned, that is likely to see again divergent moves like it has been witnessing all of this week. That is again likely to be mixed, but yes, very divergent sort of moves is what the street is expecting. What also analysts are expecting is to see resistance at the 10,000 level on the technical side and 9,800 as support. Fresh breakout which was seen in L&T, HDFC and a couple of other large caps, that is also a key trigger for next week as well, and some mid caps to watch out for are Tata Sponge as well as JSW Energy. Apart from that, there's also microeconomic data that's awaited next week, IIP, CPI as well as other key economic data from the US jobs data. So all of these factors are likely to drive markets next week. And lastly, the global noise around North Korea, that is likely to continue for some time now, and something that the markets will closely watch out for next week as well.
What is it that you're picking up in terms of what the individual stock action could be like?
Well, among the stocks to watch, Redington should be on top of the list. Apple is going to unveil its next iPhone on September 12th, which is expected to be the most impressive and expensive Given that it is the 10th year anniversary of the iPhone, it's also going to be a key product for supply chain companies such as Redington, as Q2 turns out to be generally a blockbuster quarter for it. The other one is Kaveri Seeds, where the management will be meeting US-based institutional investors, and they're expected to continue sharing the optimistic outlook as they have done recently with your channel as well. The other one is Radico Khaitan, where management has said that they see volume recovery reflecting in numbers in the second half. Analysts are penciling in 5% volume growth in the premium segment and 1% in the regular. Margins could improve by about 60 basis points this year despite the GST impact, but the important thing is that valuations are pretty attractive at 16 times FY19 earnings, which is why it is on the radar of quite a few HNI investors. Lastly is battery makers like Exide as well as Amara Raja. Lead prices have declined by about 3% this week and have come off 7% from the recent high. Given how elevated lead prices had posed a challenge, a cost challenge for the earnings in Q1, this will cushion the numbers going forward beyond Q2, and therefore is an important trigger for these battery makers.
Kunal, want to come to you. Any stock ideas that you may have in mind for Monday morning?
Yeah, Aisha, there are a couple of them which I believe should be looked into in terms of trading. First is Tech Mahindra. I believe on short-term charts, the IT stock is now looking quite robust. It's been atypical of its behavior before that as well. Earlier the stock used to see a sell on rise kind of phenomenon. Now it's seeing a buy on dips. I would sense that the structure for Tech Mahindra has changed. Would look out for a buy at current levels, targets of 445, stop loss at 422. And the second is a buy on Arvind Mills. The last week had been very good for the stock on the back of good volumes. We've seen very good price appreciation. I believe that this stock should continue to rise further from current levels as well. Targets of 425 on Arvind, stop loss to be kept at 385.
Dipan, what is that one trend that you'd be looking out for next week?
I think next week is too short to give some kind of a trend, but I think broadly the market we expect to remain range bound at least till we not see the beginning of the next earnings season and whether there is any recovery over there. So while there would be a lot of action on a stock specific basis, and we are seeing new 52-week high, 52-week low, and a lot of activity taking place in mid-cap stocks depending upon news flow, but by and large I think the broad market indices, be it the Nifty, the Sensex, or even the mid-cap index for that matter, I think we expect that to trade more or less sideways, and focus will be more on specific stories and ideas over there rather than market as a whole.
That seems to be the case this week gone by as well. But Dipan as well as Kunal, both of you, thank you so much for taking the time out and joining in. We're going to wrap up on this edition of Your Trades, and we'll see you with all the market action on the market on Monday morning at 8 a.m. But as we wind down, here's portfolio manager Parin Juveliath, who believes that infrastructure is the most lucrative play currently in the market.
This company has very, very solid assets. Market is always focusing on the negatives. Because market, when there is a fear factor, as Nigunj was telling it, there is a concern, more of concerns than the looking positive about it. So there is a general tendency of investors, trading community, the intermediaries looking at focusing on the negatives and the concerns. So the positives are not valued fully. That is the basic reason. So infrastructure, see, anybody will agree, India has long way to go. It's not as you think. It is into lakhs of crores of infrastructure spending coming up.